Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we have a very different, a very interesting video to go over. What I'm going to do is I'm going to show you guys a couple pieces of news I want to go over really quick, talking about the Fed stress test that just came out, the results that they're coming back from that, some information about JP Morgan as well as Goldman Sachs with share buyback programs, a little piece of information about a new product coming out with Pepsi. I think this is really cool, really interesting, and I think it will benefit the company just a little bit more. And also, last but not least, this is going to be the main focus of the video. I'm going to save this for last. I'm going to go over those pieces of news first. But we are going to be talking to Brian Barnes, the founder and CEO of M1 Finance. They hosted this little Q&A session with Brian Barnes, the CEO, on our dividend, the subreddit for dividend investors, specifically dividend growth investors. And they hosted this just a couple days ago, and I thought something new and interesting and fun would be to go over his answers, because if you have almost all of your money invested on M1 Finance like I do, pretty much every dime of my net worth is almost on this platform. So it's really good to know and trust a CEO like this. And more importantly, if you're using the platform, or if you're interested in using this platform, the link is in the description to get signed up, and you can get $10 just for getting signed up. But not only that, we're going to show you all the new features that M1 Finance is looking at coming out with, the direction they're looking at moving at with the company. And overall, guys, this is going to be a fun and interesting and different video. And of course, I'm filming this on a Monday. The market is about to open in about 45 minutes, and then I've received $34 from dividends and referral money, and I am also going to deposit $100 at the beginning of the market open, and we're going to be buying these 16 stocks right here. So it's going to be a fun one, guys. I invite you to subscribe if you haven't already. We're going to go over all these pieces of news, and like always, I disclose everything on my channel, from dividends to referrals to deposits to buys to sells to everything in between. I disclose everything on my channel, and I track it all through these four charts right here. I track my annual and monthly dividend income, as well as my portfolio value and my monthly YouTube income. This is all disclosed every single week, every single month, and you can follow along with the journey if you subscribe to the channel. But also, if you want to invest in my pie yourself, or check out some other things in the description like referrals, go ahead and check that out in the description. So thank you guys so much for tuning in, and let's go ahead and get into our first piece of news. The Fed sees, quote, strong capital levels at banks after stress tests green light share buybacks. On December 18th, a couple days ago, the Fed announced that the largest U.S. banks have enough capital to withstand over $600 billion in losses from a short, sharp economic slump, as well as moderate, longer-lasting downturn, and it will be permitted to pay out dividends and buy back stock on a limited basis, the U.S. Federal Reserve said. The central bank on Friday released the results of its second bank stress test for 2020, the first time it has put banks through paces twice in 1 year since it has begun the annual health checks following the decade-ago financial crisis. The Fed had previously barred banks from buying back stock to help them build capital reserves during the coronavirus pandemic. The results of the second test of 2020, which the Fed pursued to reflect the severe economic impact of the pandemic, found that banks suffered more severe losses than under previous tests. But months of building up reserves helped ensure that they were positioned to weather the downturn well, with the Fed finding all firms remaining above capital minimum requirements after taking those losses. As a result, the Fed said it was relaxing its restriction on capital payouts by banks, allowing them to buy back stock in the first quarter of 2021 after borrowing them in June. Now, how this affects me, if you're invested in pretty much any big financials company, for me, I have only really one financials company in my portfolio, and you're looking at it, we have 5% of our money inside of JP Morgan Chase. I love this company. In my opinion, it is the best bank out there. It is the most innovative, and most importantly, I think that this is going to be a massive buyback and dividend payer, because they provide so much cash flow that they're going to have to return pretty much all that back to shareholders. Now, when we look at this article and we see that JP Morgan Chase and other big banks are allowed to do share buybacks, they're potentially looking at being able to raise their dividends. Now, what does JP Morgan do? Minutes after the announcement, the Fed allows banks to resume share buybacks. JP Morgan stock goes up 5% minutes after the announcement, and guess what's released just a couple minutes after that as well? JP Morgan Chase announced in the minutes after the Fed test result that its board had approved a new share repurchase program of $30 billion. So first up, minutes after the announcement, this company is going to buy back $30 billion worth of its stock. That alone is going to increase the stock price over the next couple of years. So that is good news for shareholders, for current investors. And then if we scroll down here through this article, this paragraph, which is most important to me, dividends will continue to be capped, the Fed said. And in the sum total of the bank's dividends and repurchases in the first quarter cannot exceed the average quarterly profit from the 4 most recent quarters. Share repurchases are most important for the industry, typically making up about 70% of the industry's capital payouts to shareholders. So it's looking like in the first quarter, dividends will probably be capped. This will still maintain its payout of 90 cents a share per quarter, but I think that as we get further into 2021, the second quarter, the third quarter, the fourth quarter of 2021, I expect massive dividend raises. In the same way that this company can just throw out $30 billion for share repurchases literally in the snap of a finger like that, is the same way that I think this company can also raise its dividend 5, 10, 15% in 2021 and going into 2022. So that's a good piece of news for JP Morgan shareholders. I'm happy about those results. And overall, not just from this Fed news, but I think in general, this company on both the share price and dividend appreciation move, I think that this company has a long way to go over the next couple of years. And that's why it's one of my largest positions in my portfolio. It's a very safe, good investment. It's not too late to jump on the train if you're interested in it. Go ahead and buy JP Morgan Chase stock, in my opinion. I'm not a financial advisor, but that's my opinion. Next up, one just last piece of news before we get into Brian Barnes, the CEO and founder of M1 Finance. I just wanted to mention real quick, I've been talking a lot over the last couple months. If you've seen some of my previous videos I've made about Pepsi and Coca-Cola and how some people are really worried about them bouncing back from this pandemic and are they going to be able to pay out their dividends if you're a dividend growth investor. And it's little things like this that I think people don't give enough credit to Pepsi and Coca-Cola because they're constantly coming out with new little small things like this. And I know on the surface it may not seem like a lot, but it creates a little bit of buzz. It creates a little bit of a talk and just brings that much more brain recognition and just a short little surge in revenues and profits. Pepsi is launching Cocoa Cola drink, a drink made to taste like hot chocolate with marshmallows. I don't think that this drink is going to have any type of long-standing profits or a new major brand for the company. I think that this is something that is probably just for 2020, maybe even 2021, 2022, just a temporary little Pepsi Cola that comes out once a year, right? Now, what's important here is that, like I said, it's going to create some buzz. There's people, when they actually, let's see if it shows. Okay, yeah, here it is. After receiving more than 2,000 retweets, Pepsi will launch a Coca-Cola from their test kitchen. And if you look, this is the little Pepsi post that they had. It has 4.2 thousand likes and 6,000 have already shared the post just from a couple days ago. And this is Pepsi, right? This is just a drink brand. This is not a social media following. So 6,000 people have already shared it out to dozens and hundreds of family members and friends and all over the country and all over the globe. So this is just one more example, like I always like to mention about Pepsi and Coca-Cola. While they do have great, incredible branding power, while they do have awesome financials, they always just come up with little interesting, fun ways for them to increase revenues, increase profits through these little types of drinks like the Pepsi Coca-Cola. So awesome move there for PepsiCo. I think it's a good move. And once again, I'm really interested in trying the drink. So let's go ahead and get into what you've all been waiting for. The Brian Barnes, founder and CEO of M1 Finance. This is the post we're going to read, and then we're going to go over a lot of the question and answer sections. And it's going to probably answer a lot of the things you've wanted to know about M1 Finance for a long time, like where they're moving globally and what products they're looking to come out with, some of the strategies that the company has as a whole. And so let's get started. Hey y'all, I founded M1 Finance to be holistic, personalized, and an automated personal finance app. We have 3 main products: invest, borrow, and spend, as you can see up here. That's their main products. Invest is a free automated investing in a customizable stock and ETF portfolio. Borrow is a low-cost line of credit based on your invest portfolio value. And spend is an integrated checking account with a high yield and cashback on debit card option. We manage about $3 billion on the platform, up about $800 million at the start of the year. We're quite popular with dividend investors due to the automatic redeployment of dividends in a custom portfolio. You can find us at m1finance.com or on the app Play Store or on social media sites. And then he posted this at the end after he was done answering the questions. He said, "Well, all, it's been an absolute blast. I need to get back to M1 so we can build all the new features you're requesting. Feel free to keep asking questions, and I'll come back later today or this weekend to answer the remaining ones. Thanks for your questions and support of M1. Now, I wanted to mention real quick, we manage about $3 billion on the platform, up about $800 million from the start of the year. When I first got into M1 Finance, it was April, right? So that's when the market had went down 20, 25, 30%. So the net worth of individuals on that platform had dramatically fallen, right? They just announced, like the week that I started, that they announced a $1 billion in assets under management on the platform. Fast forward a couple months later, I believe this is probably around maybe September or so, they announced a $2 billion assets under management on the platform. And now it's December, and we're almost at the end of the year in 2020, and now they're up to $3 billion assets under management on the platform. What incredible growth this company is seeing, and as this company gets more finance, as more people get signed up, and like just me alone, for example, I've signed up 62 people to the platform. I'm not a large creator by any means, but if I can refer 62 people to the platform, there's no telling what some of the larger financial YouTuber channels out there can come out with. I'm sure they referred hundreds, maybe even thousands of people to the platform. So as we refer more people, they have more assets under management, they become more of a legit company, they have more revenues, and they can constantly invest in new products and services. As investors, I'm super excited having M1 Finance as my brokerage. Now let's go ahead and start with some of the first couple of questions that we have out here. We're going to be looking at both good and bad comments that people have to answer. So first off, we have, hello Brian, I hope all is well. Are there any major plans in progress to make moving or reorganizing slices within pies easier? The pause method forfeits historical data, and the other option is to attempt a buy-sell for the same amount. And Brian responds, believe me, I know this is a pain for our users and annoying that we haven't made this better. The issue stems from earlier decisions on how to reorganize our data, and we need to change it and then migrate all historical data. It's absolutely on our roadmap and something we desperately want to have the time to fix. We've been a little underwater with building new products, supporting our growth and scaling them. Good thing is we're hiring aggressively on the product and engineering side to tackle problems exactly like this and develop some pretty cool new features. I know also later he mentions the massive amount of people that they've been hiring for their platform. What's behind the name M1? I've actually had some people ask me this before, and it's pretty interesting to see it be answered by the CEO. Brian responds, M1 is an economic term for the most liquid money supply. It represents all the printed currency and money and checking accounts in the US. Nowadays, most money is digital, so it's more or less free to switch between dollars, investments, or borrowings. We believe that you should treat all your money as one giant pool, and it should be backed by whatever you want at any given time. But it should be liquid to spend when you need it. Will M1 Finance be available in Europe? If any question that's been asked most on my channel, from DMs to me, from emails to questions in the comments section, I have foreign investors messaging me all the time. How can I get M1 Finance? What brokerage should I use if I don't live inside the US? And it's kind of unfortunate to hear Brian Barnes' response. He says, I wish it were an easy transition over, but unfortunately it's different regulations and financial technology infrastructure that makes it difficult. Unfortunately, we will not be able to offer M1 in Europe for a few years. When we do go outside the US, the first thing we'll do is allow non-US citizens to open M1 accounts and invest on US exchanges. Then we'll move to integrate with other exchanges outside the US for a full M1 experience in people's home country. And I know that there's a lot of people, example like this person that commented right below it, there's a lot of people out there that if they were to offer this globally on a global scale to Europe and other countries as well, that they would switch over to M1 overnight pretty much because they love the platform, they love the features that they have to have. And I think whenever they do initially announce that, whenever that is probably going to grow the platform much larger, for like I said, pretty much in the factor of like a couple weeks to a month. This question says, what does M1 do better than its competitors, and when and why would I choose them over another app? Brian Barnes says, we help you manage your money in a comprehensive, intuitive, and low-cost way. If you want to invest money into an investment portfolio of your choosing with regularity, M1 is heads and shoulders above competitors with ease and low cost. If you want access to liquidity, Borrow is one of the cheapest and most flexible options out there. If you want a digital checking account, Spend is one of the highest interest rates on the market and offers cash back on debit. If you want to tie it all together, Smart Transfers let you define where you want your money going once, and then your finances are optimized in the background as you live your life. I can't think of another competitor offering the breadth and value of what we do. M1 Finance is really an amazing platform, and as I'm about to hit 10,000, those of you that don't know, that don't use the platform, that are interested in it, once you hit 10,000, which is what I'm about to reach, at all times, without fail, don't get any credit checks, no background checks, nothing like that. If you have 10,000 in the platform, you are always 24/7 available to borrow up to 35% of your portfolio at all times at only a 2% interest rate. So I wanted to show you real quick. This is what's so cool about this portfolio is that 2%, let's say, okay, you want to take out 35% of $10,000. That's $3,500. 2% of that is $70. If you want to take out a $3,500 loan to put a down payment on a house, I can actually give you some of the examples. Like that's something I'll be doing soon. If you want to start a business, if you want to pay for your wedding, if you just want to purchase more of your own investments, if you want to have an emergency fund in your portfolio, if you want to remodel your home or put a down payment for your first home, if you have massive loans like credit card debt and student loan debt, you can refinance this with a 2% interest rate. A $3,500 loan pays $70 in interest to M1 Finance every year. It's a win-win at you and M1 Finance. You get an extremely low way to leverage your portfolio, and then M1 Finance gets a little bit of interest in the meantime. More revenue for them, a faster way for them to reinvent new products back into their portfolio of products. Okay, getting back to the questions here, it says, "Hi, thanks for taking questions. I love the ease of use and allocation. In addition to the Roth IRA, are there any plans for other tax advantage accounts on M1, such as the 529 College Savings Plan or the Health Savings Account, an HSA?" And then Brian says, "Thanks for asking questions. I love our customers. An HSA will come before 529, but will likely be a year or two before we're able to offer them. Any plans to add your widget to iOS, something similar to Apple's own stock widget, but with our investment accounts pies instead of individual stocks? Can there be an alternative view to Grass where it includes only stock returns so there aren't huge jumps when a deposit is made? Been loving the service so far." Brian says, "I'll pass along the feedback to our product team. Our iOS engineers have wanted to create a widget for some time but keep getting pulled away from other product initiatives. We're hiring to be able to tackle these things in parallel and sooner." Have you ever visited Wall Street Bets, Reddit Wall Street Bets? What do you think of them? Brian says, "Funny, when not too offensive, and cringy. People are free to do with their money what they want, but we like the long-term investing mindset, not believers in the YOLO weeklies as a way to build wealth." And then I'll go ahead and finish out these little questions with this question because this is one that I've actually wanted to answer for a long time. Is there any plan to allow users to see time-weighted returns as well as money-weighted? I definitely see the value of the MWR, the money-weighted return, but we can't act like it's the be-all, end-all returns analysis. Time-weighted return, TWR, should be used in conjunction to get a more complete view of performance. It's such an easy thing to implement too. I don't understand M1's reluctance to it when people have been asking for it for over 2 years. Yes, this is something on our roadmap, Brian says, and we'll look to support. I agree that money-weighted return isn't the perfect solution. The fact that gain, loss, time-weighted return, and MWR all exist show there's no perfect way to display a return. We've played with time-weighted return in the app, and it can give some pretty unintuitive results where returns are negative despite making money and the like. The same thing happens with gain, loss. People's returns swing wildly depending on their deposits, withdrawals, or changing investment. The biggest challenge is how to incorporate all the options with the correct context and explanation. We're working on it and know it's been a frustration for our user base. So it's good to see that they're working on it. I also saw in an interview recently that they are working on changing this, adding new options to customers, and I think that this is a cool part for M1 Finance that they're working on this. More importantly, as we look at all these questions, there's lots more if you want to read them all. If you want to go to the subreddit, like I said, just go to our dividends, and it should be at the top of this if you want to read all these questions. But what's really good here, first off, what CEO of a brokerage would do this? What CEO was going to go on a subreddit and speak to people one-on-one? Take 2 hours out of his busy day to speak to basic clients like me that have a couple hundred, a couple thousand, hundreds of $1,000s invested on the platform. And I even saw some messages from people in here that had millions of dollars invested and people that were financial advisors and the likes, okay? This guy is a competent, trustworthy CEO. I love Brian Barnes. I like M1 Finance. I will likely be using this service till I retire, right? You know, I'm investing for the long term. I'm investing for years, for decades out into the future. That's why I'm investing in companies that are going to be around for the long run. So if that's the case, as long as M1 Finance doesn't have some kind of massively incredible mess up that makes me just hate the platform, or somebody comes out with something so good that it just makes M1 Finance seem inferior to what they have to offer, then I would switch. But I'll tell you what, guys, I think it is pretty unlikely that I'll be leaving M1 Finance anytime soon, as they have a great CEO. I trust them with my money. I like their referrals. I like their share system. I like all the things that they have to offer. And I think as I stay invested with them, as we go into 2021, as we get into 2022 and beyond, I think that they'll continually come out with new and better products for its customers. So thank you guys for watching all the way to the end. Like I said, sign up for all those referrals and get signed up with M1 Finance if you're interested, and get $10 for doing so in the process. This is all shared down below in the description as well as lots of other things down below in the description. So go ahead and check all that stuff out, and I'll see you guys next time.